holding in a company which is not Chinese, right? And hence, to come into India, the amount of Indian investments that may be required would now get reduced by at least that 21%, right? Because you already have one foreign partner who does not share border with India, land border with India. Now, I think Leapmotor may not right now be looking at using the new EV policy and importing cars at that 15% duty, simply because all its cars are under that EV policy mandate of 35,000 US dollars. Now, if you look at what these EVs could likely do in India, no matter whatever format they come in, I think number one, a need gap that India has is the fact that India needs low-cost electric vehicles to really grow from that present level of about 2.3, 2.5% of the new cars sold being EV all the way up to 30% by 2030. So while at one level the focus is on companies like Tata Motors, etc., which are already producing low-cost electric vehicles, MG in partnership with JSW, I think Leapmotor coming into India through whatever other partnership in addition to Stellantis could actually be that third and fairly formidable player who does begin to offer electric vehicles at a price point as low as 10,000 US dollars in China, and that 10,000 US dollars equivalent in India comes to very well within 10 lakh rupees. So owning a Leapmotor electric vehicle at 10 lakh rupees or under as the entry market, seems like a good opportunity for India.
Oh, okay, but would that not then require Leapmotor to pay, to up its prices, or the prices are likely to remain under 10,000? Is that the message coming in? Even if it's an Indian subsidiary, will it have to then pay more fee by the way of its entry from China?
So I think what needs to be seen right now is I don't think India would be very happy allowing Leapmotor to import fully built Leapmotor cars from China and selling them in India. That's a problem we did find, BYD also confronted again. So it will have to eventually announce some sort of a manufacturing base in India. Now, that manufacturing investment also coming purely on account of Leapmotor is unlikely to go through because the land border sharing with China comes into action. So Stellantis being the majority player in the overall Leapmotor Stellantis partnership for the India arm, and perhaps one more Indian investor, and thereby some investments coming into making Leapmotor technology driven Leapmotor branded cars and selling them in India seems like the possibility.
All right, so
ahead.
no 100% export duty if it sets up a subsidiary here in India.
I mean, it would be foolish to want to pay 100% duty on cars that it wants to sell in India. Maybe in the short term it may have to do that until the plant in India gets commissioned and starts rolling out India made Leapmotor, Stellantis cars, but until then, it'll have to, I think some sort of a commitment on investment is forthcoming here.
All right, so Leapmotor is going to be another entrant into India's EV market very soon, and its partnership with Stellantis may allow it to do so within a couple of months' time from now. But moving on and staying on, in fact, with China, which is buying gold like there is no tomorrow. The gold prices have now, in fact, reached highest levels as Chinese investors and consumers vary of real estate and stocks are buying precious metal at a record pace. Often considered a safe investment during times of geopolitical and economic turmoil, gold has soared in prices in response to Russia's invasion of Ukraine and the war in Gaza. Now, gold climbed, in fact, highs of $2,400 an ounce. And you can blame it on China. Why is China buying gold like never before? Let's understand that. What's really happening here? What does China know that we don't know?
Yeah, exactly. So, I think the skeptic in me wants to, go on a line that perhaps China knows something that we don't know.
Or is it preparing for an assault on Taiwan?
Well, I don't know. I think all that is going to be very speculative.
Because I read an Economist headline this morning that, it could either be that China knows that there is a war forthcoming, or there is some sort of geopolitical tensions that someone else may not start, but China may start.
True. So, I think the fact that for the last 17 months, the Chinese Central Bank, People's Bank of China, has been on a gold buying spree makes you believe that it is not just citizens of China who are not really finding great returns through investing in stock markets or the real estate sector, which has crashed and has been actually going down over the last 2 years. So why is the People's Bank of China also continuously buying gold? So I think tensions have been high. Taiwan has been a flashpoint. Tensions have been high in the Taiwanese Strait for many months now. So will that result in a Chinese driven aggression or not? We don't know. I mean, there were talks actually that during the Taiwanese elections with the new government, with the new regime in Taiwan, that flashpoint could actually turn into becoming something more catastrophic. But it's been a few months and we haven't really seen much action on that front. I think so. The skeptic in me likes to at least think in the direction of China wanting to do something and hedging itself and its own coffers by way of buying more gold. What is China also doing, interestingly, in this whole gamut of gold buying is the fact that it's actually not using the yuan to buy gold. It has US dollar debt. In fact, it had taken debt from US in the year 2021, 2022 for as high as almost $1 trillion odd, and part of that has been repaid. But China still holds about $750 billion plus of US debt. It is actually now using its forex reserves of US dollars to buy gold. So while the forex count remains the same, it is actually using that forex money in the form of US dollars and not yuan to buy gold, which means it is selling US dollars in the market to buy gold, which means it is actually putting pressure on the US dollar while protecting the interest of the yuan. So that is one skeptical side of it. I think people in China, obviously investors in China, have not found the kind of returns that they were looking at in other forms of investment.
Neither in the equity market nor in real estate.
Absolutely. But interestingly, even as a percentage of China's total forex reserves, gold has now increased to about 50% and is now at about 4.6% of the total Chinese forex reserves being in form of gold. India's forex reserves in the form of gold are actually double of that. So India, while it's a smaller economy and hence even the forex reserves are smaller as compared to China, but the percentage of gold in our forex reserves are about 9%.
So that essentially tells you that India is in fact hedging more gold as opposed to China there. But China, of course, going for the safe metal and increasingly so also in its process upping the price of gold to about $2,400 per ounce in the recent past. You can blame it on China if gold gets any more expensive from here on. But with that, it's time for a short break here. We'll be back with more stories on the other side.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. RBI has asked fintech players in India to slow down with loan disbursals. In a meeting recently held with fintech heads, RBI is said to have told many companies, especially those involved in loan products and or are operating as loan service providers, to cut down growth. Now, RBI's concern is that despite curbs in the risk weights in unsecured loans, there is little or no moderation in growth. While a few fintech leaders have communicated to the regulator that high growth is coming off a low base, the reasoning hasn't found favor. In fact, RBI has now set target growth at around 15 to 20%, and is a message that has come out clearly. While currently fintech lenders are among the fastest growing entities, almost every fintech across the board has clocked about 35 to 50% growth in financial year 24. But RBI is very clear, as far as your loan portfolio is concerned, Kartik, you've got to taper down growth.
So I think, this is something which honestly, Shweta, we had been expecting. And if you remember, not the monetary policy meet gone by, but the one before that, I think it was in the month of February, if I'm not mistaken. And, RBI Governor Shakti Shrikanta Das in his commentary at the MPC had pretty much said, and this is in the immediate aftermath of the Paytm crisis, had actually Paytm Payments Bank crisis, had actually said that e-platforms, electronic trading platforms could perhaps be, he had hinted quite clearly that those could be the next sort of, bucket of platforms that RBI may want to scrutinize, in a little more detail. And the fact that Hindu Business Line has reported this story, we haven't been independently able to verify this. The fact comes by way of RBI in the month of November. Last year, on the 16th of November, if I remember correctly, had actually increased the weights, the risk weights on unsecured loans. And that was done basically to ensure that there is enough capital adequacy with NBFCs, with banks, to ensure that any possibility of a ballooning loan going bust, there is enough capital set aside that it doesn't become a systemic risk. Now, that was obviously something that all NBFCs had to adhere to, and fintechs, by nature of the fact that they are not technically NBFCs but are platforms which connect borrowers to lenders, puts them in a little bit of a precarious scenario, because number one, they don't have money that they themselves are lending. They are pretty much acting as intermediaries, connecting an NBFC, let's say for example a Bajaj Finance, with a lender who with a borrower who wants to take an unsecured personal loan, and their job pretty much ends there. So at the banking and the NBFC end of things, I think this increased in risk weights has ensured that there is no chance of, or a lower chance of, those institutions going bust and falling under. However, in the case of fintech players, I think now what the RBI wants to do is, it wants to tell them that slow down on offering loans, even if these are not your own lending cycle. This is you connecting borrowers to a certain lender. Slow down on that loan growth, and that loan growth right now has clocked an impressive 35 to 50%, year on year, which you mentioned. But RBI wants to bring that down to about 15 to 20%. So pretty much half the rate of growth of unsecured personal loans being lent to unsecured borrowers.
I just want to break it down for our viewers, because it gets very complex. We keep talking about debt, we keep talking about loans. We're essentially talking about a non-mortgaged, non-housing loan, essentially a loan which could be for a consumer durable like a laptop or a PC or a phone. Now RBI does not want this portfolio of loan to grow, essentially retail loan to people like you and me for small consumable items.
That's right. So, I think the categories that you mentioned again have some sort of, a very tangible requirement for you to take a loan. We don't know if there is data out there which tells you how many people are actually taking loan right now for more granular essentials. Could be education, could be maybe, something as simple as paying the child's next quarterly fee at school. So all of these come under the category of unsecured loans, because they are not secured by a mortgage, by a collateral, right? So since there's no collateral which is being served as a hedge to taking that loan, these loans become unsecured. So NBFCs and banks, by keeping enough capital adequacy, which got increased by 25% in the month of November, are hedging themselves that if X number of loans in their overall portfolio were to go bust, then that institution can withstand that loan going bust and is not going to become a systemic risk.
So I want to throw this question to you, because you're someone who believes that as long as people are buying in and they're paying those loans back and it's not turning into an NPA, there is no problem. Why does RBI have a problem with this ballooning loan segment as long as people are paying back and servicing their debt in due time, in due course?
Right. So, I think in the absence of very, very credible data which tells you what is the default rate, it is difficult to take a stand on whether those ballooning loans are good for consumers or bad for consumers. For a fact, if all these are leading to consumption, and consumption by virtue of consumption being almost 55% of India's GDP, it ensures that at least people are making purchases today which are adding to India's economic growth today. But if the number of people taking these loans for consumption begin to default on these loans, then it leads to a systemic risk. And that could be perhaps the RBI's fear right now.
Right.
So Fintechs in all of this actually find themselves in a very precarious scenario. At one level, they need to abide by whatever norms and guidelines that the RBI wants to set on them, and literally telling them as a regulator to slow down on their loan dispersal. At the same time, these fintechs are heavily invested in companies, and they've got to show some aggressive growth back to their investors to stay in the business and to get more funds, and for their own overall valuation to to only grow. So fintechs, they seem to be now in a very precarious scenario that should you pursue growth at all costs, or should you slow down growth because the regulator doesn't want you to grow that fast?
All right, but RBI making it clear there that it does not want retail loan, non-mortgage, non-collateral loan book to grow, perhaps hinting at the fact that there is some data out there on loan servicing that is not out just as yet. We'll continue tracking that story for you. But shifting focus now, clarifying on reports about 10 times more pesticide residues in herbs and spices, Food Safety and Standards Authority of India has said they are baseless. Now, FSSAI said that India has one of the most stringent standards of maximum residue limits, or MRL, in the world. Additionally, it also mentioned that pesticide registered on many food commodities with different maximum residue limits is based on risk assessment data. It added that while MRLs are dynamic in nature and revise the base on scientific data, revisions of limit is in line with global standards. All of this comes to light after Hong Kong and Singapore banned certain spice blends from MDH on Everest, stating that they have high residue of ethylene oxide, which is considered to be a harmful cancer-causing pesticide. FSSAI is now saying that there is no cause of worry, and in fact all pesticides that are added as preservatives are in fact within the global standards. And also the Godrej family story continues. The Godrej family split may not attract tax. The multi-billion-dollar settlement entered by the third generation members of the Godrej family will not attract any capital gains tax, even as shares of over half a dozen companies owned by the family are now changing hands. As per media reports, the family has chosen to use the family arrangement route under the tax law, which is outside the purview of the income tax, and also does not require application of capital gains tax. The Godrej restructuring is as per conditions prescribed under the family arrangement route, required to avail benefits from taxation. The 127-year-old family conglomerate announced that it is splitting into two last week, and we now know, Kartik, that they may not have to pay any tax at all.
Interesting, isn't it? I think the family arrangement route is obviously a very interesting formula to take. It's not very drastically unlike the Hindu undivided family, how the Godrej have a Parsi legacy and will not fall into the HUF category. But the fact that these shares are actually getting transferred and not getting sold in the market and bought in the market, to my mind, assumes no tax liability for the Godrej clan.
Well, I think Godrej family would be happy about that. No tax liability as far as Godrej family split is concerned. We'll sip into a very short break. We'll be back with more stories. Stay tuned. There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Rollers should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also a responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Welcome back. You're watching Business Plus. Billionaire US investor Warren Buffett has said that India has unexplored opportunities. The Berkshire annual meeting, and speaking in fact at the Berkshire annual meeting which took place in Omaha, without Charlie Munger, the vice chairman of Berkshire and Buffett's longtime investment collaborator who passed away at the age of 99 in late November last year. Buffett spoke for the first time on a variety of issues from AI to India. Warren Buffett said, and I quote, "I'm sure that there are loads of opportunities in the countries like India, and there is something a more energetic management at Berkshire could pursue in the near future." Kartik, this is essentially Warren Buffett saying, I know there are opportunities, but wait for a management change.
Absolutely. I think he's pretty much fairly clear that at the age of 93, he doesn't want to explore, new opportunities and invest the kind of energy that it takes to study and develop contacts and insights into new emerging opportunities for Berkshire Hathaway, and India, unfortunately, is one of them. However, he said that there would be loads of unexplored and unattended opportunities which the next management could pursue. And the next management, interestingly, now there are two vice chairmen, of course, with the sad passing away of Charlie Munger. On 28th of November last year, just about 32 days short of turning 100. This is the 60th annual shareholder meet being organized by Berkshire Hathaway, and the first one minus Charlie Munger. So that, of course, is sad, but the succession line is also fairly able, and I do a little bit of wordplay there because Greg Abel is the person who is slated to replace, Warren Buffett whenever that need arises. And then there is also another Indian origin gentleman by the name of Ajit Jain, who's also vice chairman. And both these gentlemen were sitting on the stage at Omaha where this, this annual shareholder meet was taking place. Now, obviously, these annual shareholder meets are the talk of the world, literally. There are stories of people taking 25-hour-long flights from Japan just to come attend the meeting and listen to what Warren Buffett has to say. And then there is also somebody as as renowned and as famous as Tim Cook, the CEO of Apple, sitting in audience and listening to what this ace investor has to say. Now, Apple, interestingly, continues to be the largest portfolio in all of Berkshire Hathaway's overall investments. And right now,
albeit tapering down now.
They had to sell a little bit simply because the Apple stock did not perform in line with what the technical expectations of the Apple stock were. But the fact that you have Tim Cook sitting in audience and Warren Buffett saying very clearly that his focus continues to be America, true blue American entrepreneurship. He's sitting on a cash pile of almost $200 billion, and the overall investments are close to almost $1 trillion worth in market cap. So at 93, Warren Buffett coming out saying America continues to be the focus. Early bets in Japan have done the company well, have done the investors well, but India would be loaded with unexplored opportunities, but not in his lifetime is he exploring them.
Not in his lifetime, perhaps for future management to look after. But with that, we've run out of time on this show. Thank you very much for watching.
Film and entertainment is